Palantir continues to ink massive partnerships. They just inked a deal with the UK government, their National Health Service, and they also lined up a deal with the PWC consulting firm today to bring AI to PWC's clients. So I'll go through both partnerships. Also, I'll go over why I think Palantir could be bought out by a larger company. I'll go over the financials. At the end of the video, I will give a price prediction for the stock. So without further ado, let's dive right in. So Palantir rose 5% roughly on Friday, as the company may be on track to win a contract to overhaul the UK's National Health Service. Palantir has contracts around the world with government intelligence agencies and military forces around the world, and appears to set to be named the winning bidder for a 5-year contract, which may be extended by as long as 2 years and could be worth as much as $600 million. So this is nothing to sneeze at. This is a huge contract. And Palantir previously worked with the UK government helping manage the country's COVID-19 vaccine rollout, obviously, and then they also partnered up with PwC last week to bring AI to their clients. And then let's take a look at this potential buyout. So networking company Cisco announced in September the acquisition of software specialist Splunk in a major and transformative $20 billion deal, and a push to acquire artificial intelligence capabilities. Large, deep-pocket corporations like Cisco are willing to put billions of dollars on the table. The company offered a generous takeover premium of 31% for Splunk, and other acquisitions in the data analytics sector could follow. So it's not shocking to see some of these smaller AI firms be bought by larger firms. I think that's going to be a trend, right? If a large firm like a Cisco doesn't have a firm AI department, well, why not just buy a smaller AI company and make it your AI wing of your company, right? So I increasingly see Palantir as a potential takeover candidate, as the company has also aggressively bolstered its AI capabilities. The company's CEO recently said that the software analytics company is seeing unprecedented demand for its corporate customer base for the integration potential of AI with its Foundry platforms. I believe the Cisco Splunk deal has huge implications for Palantir, and more hardware companies are going to be interesting in acquiring enterprise software capabilities. And then business intelligence is a big business, and according to President's research, a rapidly growing market for data analytics companies like Splunk and Palantir to tap into. You can see that chart right there. So with that being said, though, let's take a look at the valuation of Palantir, right? Because a stock having an awesome opportunity is always great, right? But it always matters what you pay for a stock. So the current PE for Palantir is at 110 times, meaning that for every dollar of earnings, investors are willing to put $110 in. And this PE is actually projected to drop down to 73 over the next 12 months. So that's obviously projecting Palantir to continue to grow its earnings. So yes, we have an expensive PE, but we're moving in the right direction. We're seeing growth in earnings, which is awesome. And then with that being said, let's talk a little bit more about growth. So let's look at the revenue growth. The revenue growth for the last 12 months has been 17%, which is below Palantir's 5-year average of 32%. But at the end of the day, the company is still growing at a massive rate. And we're seeing revenue growth for the next 12 months at 19.5%. So almost 20% for the next 12 months. So definitely seeing growth intensify, which is really a welcomed trend for the stock. And then, like I said, EPS growth, EPS diluted growth for the next 12 months is projected to be 27%, which is well above Palantir's past EPS growth. So typically EPS has grown at about 11% a year for the company. Now we're at 27%. So the company is growing its earnings at a rapid clip right now. And then the company's also been is currently more profitable than it has been in its history. So gross profit margin for Palantir is 79%, which is significantly above its 5-year average of 73%. So definitely signaling here that the company is making more money for what it sells. Gross profit, for those that don't know, is just revenue minus cost of goods sold. It tells you what a company makes for what it sells. So to be at 79% is definitely a good number and is well above Palantir's historical growth profit margin, which is awesome to see. And then let's take a look at the company's balance sheet quickly. So not too much cash on hand, or excuse me, I misspoke. Definitely a good amount of cash on hand. We have $3.1 billion. I was going to say not too much because it's only 49 cents per share, because the market cap is actually pretty high for Palantir. But it is worth noting that the balance sheet is very healthy. So we have $3.1 billion in cash and then $250 million in debt. So that means that the company has $2.8 billion more cash than debt. So having more cash than debt is always a good situation you want to be in terms of the balance sheet. So definitely signaling that this company is in a healthy spot. And we have net operating cash flow for the past 12 months of $403 million. So company isn't burning cash or anything. So this is a very, very healthy balance sheet. Love to see that this company basically has zero debt when you compare it to its cash. Let's take a look at the company's Wall Street analyst ratings. So this tells me what Wall Street investment firms are thinking about Palantir. So we can see here that there are 5 bullish ratings on Palantir and 7 bearish ratings on Palantir. So 5 to 7 in terms of bulls to bears. So you could kind of take away from that this stock is somewhat of a battleground stock, meaning that there's a wide range of opinions on the market for Palantir. So interesting to see that here. We also have a consensus price target of $13.30, signaling that net the Wall Street community is somewhat bearish on this stock, but at the end of the day, I really do see this company as having a massive long-term opportunity within the AI space, and that is kind of shown throughout all the partnerships that they've kind of garnered to this point in time. So let's take a look at the chart here and give a price prediction based on technical analysis. So we're coming up to test this resistance level at around $17, which is where shares had topped out in the past. It's where shares had topped out in June of last year. It's also roughly where the stock topped out in late August, and it's where we saw shares top out in September. So unfortunately, I think we probably fall from this $17 level once again, and we come back down to the 100-day moving average at around $15.40. So seeing somewhat of a short-term pullback for this stock. Long-term, I think over the coming weeks we'll be able to break through this $17 resistance level, and we'll see a move up to support. To the really next major level of resistance at $21. I picked this level because this is where shares had bottomed in July of 2021 and in May of 2021. Past support acts as new resistance. We saw that level roughly act as resistance in early August. So I believe this level acts as resistance for Palantir once again, and we see a move up to about $21 for Palantir. So that's kind of what I'm seeing for the stock from a chart standpoint. And then let's take a look at the company's historical performance. So in October, shares do typically rise 7% on average. So definitely a good number there. Obviously not the end-all be-all. Only have 2 years of pricing data. But with that being said, I think Palantir is a likely candidate to get a potential buyout over the coming months to really years. As like I said, larger firms could be looking to expand their AI capabilities, and the easiest way to do that is kind of just buy up a smaller player. So I think Palantir could be bought by a larger firm, and as I've said, the partnerships that Palantir is getting right now, the partnerships that they're signing, are definitely signaling that they are a leader in the AI space. So pretty fair valuation, moving in the right directions. We're seeing EPS grow at a massive clip. We're also seeing profitability improve, and we're seeing revenue growth as well. So with all that being said, I think Palantir is a really good long-term hold, and I will end the video there.
Looking to learn more about the financial markets? Well, I just released a new course that will teach you everything you need to know about the stock market. You can find that at happyinvestingtoday.com. Also on the site, you can purchase one-on-one coaching sessions where I will break down your portfolio, and to better assist traders when searching for setups, I'm selling trading bots, which will tell you how your trading strategy has performed historically on a stock, crypto, or currency that you are researching. If you would also like to see what me and my experienced trading team are doing on a day-to-day basis, join our Discord, which is linked below, for a free 7-day trial. With that being said, please leave a like and subscribe. Appreciate you watching this video.